Right, so amid these uncertainties, where will gold prices go next? And what are the best techniques and technical analysis to use in this current condition? To discuss more, I'm joined by Astronacci founder and CEO Gemma Guiardi. Thank you so much for coming to our studios to discuss about this. This is, of course, a very interesting and prospective assets, as I mentioned earlier. It hit a record high in April, but now it leveled off and, kind of uncertain about where it could possibly go next. But before we delve into that, I want to talk about how, usually gold prices spike when there are extraordinary conditions, times of crisis, COVID in 2020, the Russia-Ukraine war, and of course recently the Israel-Hamas war, Israel-Iran tensions. So, I mean, as I mentioned, it hit a record high in April.
Yes.
It spiked, right? But how is this current condition different from the previous extraordinary conditions, for example, in the Russia-Ukraine war and in COVID 2020?
As we know, the highest volatility came on COVID, because COVID is, nobody knows what's happening and nobody can expect what's going to be at the time of the uncertainty. That's why it's volatile and people jump into the gold because they think this is like a safe haven. So they keep buying the gold, and then the volatility like extremely huge, like 1 minute chart. I still remember back then in 2020, 1 minute chart, one candle is about like 200 pips. Wow. It's $20 per 1 minute candle. So it's super risky that time, but it's over like huge opportunity. Then we always know every time we have a war and a political crisis and people always think that gold is a safe haven, they're gonna jump into the gold. And then the Ukraine-Russia, even though it's dropped about like 4,500 pips or 450 points. It's a little bit lower than the COVID. Then when we talk about Israel and Hamas war, 338 points, and Israel-Iran war is 200 points. It's spiked, but it's not, it's like extremely spiked like that, like you say. Why? Because it's already present.
Right.
War is a war because the first war is here. So if you can see, the first war is always like extreme volatility. And the second war is slightly below. The third war, market is already like present in everything. So, the market action discount everything. Then the price chart itself is showing the new bullish trend probably gonna comes, right? And then Astronacci always take a look to the number 1834 and 2,630. At the beginning of 2024, I set a target 2,300, and that is already hit. And then now we're looking for the next new resistance, remember? 2,630. But the bottom range is 1,834. So that's the two range of 2024.
Right, two range of, So, I mean, what conditions could potentially lead to that 2,630, as you were mentioning?
I believe the Fed interest rate. That's major for now, right? And then the U.S. election is also going to bring a huge volatility. Whether or not it's going to go up or down, but we can expect the third quarter of 2024, when Donald Trump is trying to jump into the election game, right? And then now they try to provocate the market like, hey, I know about the crypto, and the other opposition, they don't know about the crypto. So it's good to give like crypto market and then the other market going into the more volatile situation.
Right, so U.S. elections, we could potentially see a spike if the U.S. public sort of
accept the president or not, right? And then if the U.S. dollar is getting stronger and stronger, but no war anymore, maybe gold gonna plunk.
I see. What about Fed rate cuts?
Yeah, Fed rate.
Let's say, if the Fed, they cut their rates, what could happen?
We can see the fact that the U.S. inflation now is getting higher and higher again after so many months that it's cooling down, right?
Got it.
So the only reason the Fed gonna bring the interest rate up is because of the inflation gonna rise higher. So once the U.S. interest rate gonna go up, then the gold probably gonna stay down, sideways, or even decline.
Right.
Unless the wars keep going, and then people will buy both. It's like gonna put the money in the U.S. dollar and also buy gold, and maybe China will buy more gold because of that.
Right. So we're going to go deeper into the outlook at the end of it as well, but let's talk about the different trading techniques and technical analysis tips that we can use right now. It's amidst uncertainties, but before we begin, disclaimer on, because the following tips are for information purposes only. It should not be seen as a direct investment advice. See Today is not responsible for traders' losses or gains. Please trade at your own risk. See qualified financial advisors before making decisions. Okay, but let's continue. Still, these are, information purposes. Right, so let's start with the first one, base breakout strategy. Talk about this.
The best strategy in gold when the market moves in one particular very clear trend, like when you got a war, it's very crystal clear that gold is going to go higher, then the base breakout strategy is one of the highest winning rate ever. So we never trade gold in the like ordinary breakout strategy, and people normally in the technical analysis, they're looking for resistance, they're going to go breakout trading, but not in gold. That's why a lot of people fail when they trade in gold with a normal breakout strategy. Now, if we're looking to break out, the only safe method for breakouts is a base. So this is a base, basically, when the gold make like a square consolidation, okay, amid the bullish trend or the bearish trend. So in this case, the price going up and then it's take a break for a while. So it could be 6 to 8 days, okay? Then it's most likely it's gonna go up again. So this is what we call a rally, base, and rally.
Right.
And this is part that we will jump into the market prior to the breakout, okay? Or maybe just the day one after the breakout from the consolidation. So this is one of the best strategies that I ever used for the past 15 years in gold trading, and give me like 80 to 90% winning rate for the whole statistic that I make.
Right, and this is for a buy strategy.
Even for the sell. So
Even
basically
for the
the
sell,
same.
Right.
Same. So if you
it's the same. So basically it's a
drop,
downtrend
base, and rally.
I see.
So this strategy works when the trend is very strong, whether or not it's going up or down. So we're waiting for the base, the rest period of the price. The supply and demand will be equal at that time. Then we will have the imbalance of supply and demand. After that, then we're going to jump into the market.
You could argue that in the past few days, this is kind of what's been happening, right?
That's
about 2,300, 2,990 or 80 something. Right. So now we're in the consolidation.
We're in the consolidation, and then the 8th of May, it was a new moon pace. And the new moon pace gives you about 90% of reversal chance. It means the base will most likely stop yesterday, and then we're heading to higher level.
Right. But a disclaimer on, of course, trade at your own risk, but this is sort of kind of the trends and techniques that has kind of worked in the past, right?
Then we also have the wages pattern.
Sorry, let's just go start from here, because we kind of want to know maybe in more detail, right?
So other than the base, because the base is more into the continuation. And now, how about the reversal? Let's say we know the price is going high and high, and then stop here, maybe the value is too much, then the seller is stronger, and then we need to identify what's here. Then most likely the wages pattern is really work on this kind of reversal. So near to the top, before any reversal, you will see this pattern. So when the price going higher and higher, but the lower is narrow and narrow, so they try to converge together. So this is what we call a rising wedge. Rising wedge is pretty common pattern. Everybody knows about this. But I found that if you find a rising wedge in gold, it gives you high winning rate when you try to sell short gold.
I see.
So this will give you a reversal. If you want to see the example, I can show you.
Sure, definitely. So let's go to the next graph.
So this is part of the example. Before, if you can see, the price is going higher from this part, going higher, and that is making like a sideways, but it's still higher on this peak, right? But the bottom is also higher, and they converge. If you can see, that's a start beginning of the downtrend.
I see. So maybe just to give our viewers and maybe traders at home a clue, where would be a clue to sort of enter your position? I suppose after it hits, after it crosses the recent low?
The book say when you break the diagonal, this is what we call a diagonal trend line.
I see.
This is the first enter, but in gold, we don't enter at this point. We always enter here at the lower high.
Lower high.
So normally, this is the first move, and this is the second move. So we're going to wait until the price try to break this, but it's failed, right? And then has no volume, has no volatility, then it suddenly drops. So this is the best entry point after the rising wedge in gold.
Got it. And I suppose this could be useful for when things are relatively sideways. There's slight increases. A few 10 pips, and then a downtrend.
And then if you can see here, before it's dropped, oops.
Sorry.
Let's see.
Oh, just give me a second.
Okay.
Let me do it. Okay.
All right, let me grab the pan. This is very important. Before it's dropped, it's still making the base.
Right.
You see that?
Okay.
So this is the base
Right.
for drop. Now, breaking this base, you can do start sell.
Okay. All right. So we have a lot to go through. So let's go through them. Falling wedge. Right.
Yeah,
How
this
does
is
that
the falling wedge is like
for the buy.
opposite.
Yeah.
If you see the falling wedge near the bottom level, then it's a sign that gold gonna go higher. So it's just like a converse, like opposition with the rising wedge.
But it's a similar. Okay.
Yeah.
Right. So let's go to the next one, which is ascending broadening. Now, how is it different from the previous
If you
one?
can see, the hat of the pattern, right, is getting wider. The oscillation is wider and wider. The falling wedge is getting narrower at the end of the price movement.
Right.
This is like increasing volatility and
Right.
increasing the traps, because you see it's hit the break the resistance,
Yeah.
people think it's gonna go up, and
Go
then
up.
people buy, but it's dropped below the resistance,
Right.
right? And then if you see a ascending broadening wedge, it's always
Yeah,
it's
give me a
always
second. Okay,
the
yeah.
bearish pattern that's happened.
The bearish pattern. Right.
So we're looking for sell whenever we see the ascending broadening wedge, and this is pretty accurate in gold.
Okay. So this could be useful for when the overall sentiment is bearish.
Correct. But the difference with the falling wedge, the rising wedge, the higher the price, like prior to the breakout, the rising wedge is narrow. But
Right,
this
this
one is wider, and this is more risky.
Broadening.
This is way riskier than the rising wedge.
Much riskier. Okay. Disclaimer on again. These
Yeah.
are just information purposes, right? Trading at your own risk because it is risky.
Correct.
Trading,
Of course.
trading spot, it is risky. All right.
then-
So this is similar. Ascending.
This is like the opposite. And then this also a lot of pattern going on in Indonesia stocks market as well.
Right.
And then the US stocks. This is pretty common. But if this happened to gold as well, the descending broadening wedge will bring you significant spike in gold market.
Right. So similar, I suppose the best place to enter is
Mostly people buy on this breakout, and then it has to
Right,
be
on the breakout.
in conjunction with
Yeah.
the major news.
right.
Okay, because it needs huge power to break this pattern.
Break it. Right.
Correct. Then we need some like a macro sentiment that happened in the market.
Okay. So this is useful for news.
Correct.
News days. Okay. U.S. session.
Yeah, mostly it's US session.
Mostly U.S. session. Okay. Got it. Right. Rejection strategy.
Now-
Talk to us about this.
This is what I like. Okay,
Yeah.
the safest strategy in gold, other than the base breakout, is wait from the rejection. So let's say this is the break
Yeah.
of the base. Okay,
Yeah.
price going high.
Oops.
I'm so sorry.
So
Yeah.
let's just turn on the
Oh yeah, the pan. Right?
yeah, the pen. Go ahead.
Okay, let's see. This is the base that we're talking about.
Yeah.
Now the price break, most likely people gonna enter at this
Yeah.
point, right? But the safest entry level is wait until the gold back to the base.
Right.
And then showing the rejection, which is here, that's making a new swing low.
Okay.
Then this will become your new entry setup. And this is over you like lowest risk
Safest.
and safest.
Okay. Safest. Okay. Unfortunately, we are running out of time. So let's kind of go through the outlook.
Okay.
Just very quickly.
Now, this is
how
the
do you
outlook.
see it? Yeah.
In 3 minutes or less, you will understand
Yeah.
that the price is going bullish. Okay. And this is the bullish, and then now the price taking period of resting.
Got it.
Okay, and make some base.
Yep.
And there's a new moon pace on 8th of May.
Right.
And then we believe that this will be a rejection where the price is gonna come higher to 2389.
Right.
This is the new resistance
New resistance.
in condition that the price will start moving higher and start its rally after not more than 3 days since
Okay.
yesterday. So
Right.
it means before the 11th, right?
Got it.
So the price should go higher and higher,
Got it.
but the target price is about 2389.
Okay, got it. And of course, as we know, things are heating up in Gaza and in Rafah
Correct.
as well. So, potentially. But again, disclaimer on trader.
But again, this could be failed whenever
Yeah,
the price
exactly.
decide to continue
Exactly.
down, stop buying and then
stop
wait.
buying. Right. So you still have to do your own research. You still have to, see the market, how it's going. All right. In any case, Gema Guyari, Astronacci, CEO and founder, thank you so much. These are very
I really appreciate the time.
helpful and really big tips for any of the gold traders out there.